Welcome to Common Sense Investing. My name is Cameron, and today I'm going to introduce you to one microcap stock on the stock market in 10 minutes or less. What stock am I introducing today? Avante Corp. This is a leading provider of technology-enabled security services. We acquire, manage, and build industry-leading businesses which provide specialized, mission-critical solutions that address the health and security risks of our customers. They've been managing risk and providing security solutions for high net worth homes, high profile individuals, and high profile businesses. They then list out problems with the security industry that they solve, saying that many companies only provide one service, they're not sophisticated with technology, they have few options available for high risk situations, and other things. Basically, we are better than this. So the crux of their argument, which isn't bad really, is that they're an established security business, fairly low risk, but augmented with new technology and services. So that's not a terrible pitch. Tells you a lot about this company here. When they were founded, 187 employees. They have $5 million of cash. They basically have no debt, but they do have a line of credit, $12 million undrawn, 26.6 million basic shares, 28.5 million shares fully diluted. And as of today, yes, they are still at a $23 million market cap. They also talk more reasons about why you should invest in them instead of why they are better than other businesses. Basically, since 2022, share price has done nothing, which, I mean, the rest of this video at this point has to look at, can that change? Are there changes ahead, or is it just more of the same 10 out of 12 adjusted EBITDA positive quarters of stagnation that they're proud about? Avante Black, super secret, specialized services including unique investigations globally, corporate espionage, and family wealth conflicts, advanced solutions including tracking anonymous emails, sentiment analysis, and reputational monitoring across the dark web, global evacuations and extractions. Has anybody seen the show Ray Donovan?
You think you're the first person I've dealt with woke up in bed with a dead body?
Halo. Advanced proprietary surveillance software for real-time monitoring with superior analytics. A lot of companies are saying this these days. Basically, cameras providing high-level security with cutting-edge AI video analytics. I feel like this is a very competitive market, but I mean, if it pairs well with the rest of your services, I'm sure it can do very well. Avante verified human in the loop, and this is what differentiates them from, I was just saying, how much competition there is in the AI integrated security camera space. Well, you have to keep in mind that Avante is tailored for high wealth, high profile people and businesses, right? So they can afford more money to pay for better services. And finally, Wally. Right? This is what got people excited for the future. Halo Live monitoring platform in a portable rental unit. This is unmanned, solar-powered, wireless communicated security tower. This is needed everywhere in parking lots and large gatherings, schools, hospitals, corporate campuses, construction sites. So that would be a big one for me, right? Public spaces and anything else that you could think about where you would need remote monitoring, but you maybe don't need it for 12 months of the year. People were very, very, very excited about this product because that is basically what Zedcore does. And when you look at Zedcore is an extremely successful company, up 227%. Even as I record this video, they were just a BNN Bloomberg top pick, and they were talked about again by Donville Kent. So everybody loves Zedcore. Zedcore deployed 229 mobilized security towers during the 3 months. They're planning production of 1,200 to 1,400 towers per year in 2025. Right now, I believe if you do the math, they have over 1,500 towers out there in the field available to rent. How many does Avante have? 10, ramping up to 10 mobile units within a couple of months. So if this video sounds a little bit bearish so far, I don't think you'd be wrong. I think there was high expectations for Avant when I started making this video, but with all the potential reward in some of these revenue verticals, which I admit are pretty interesting. I like human in the loop. I like the potential of Wally. Like, I do like the core of this business, but there is some risk we need to look at. But before I go look at the numbers, do not forget, I'm not a financial advisor. I'm definitely not your financial advisor. This is simply an introduction to this company and stock, so you can decide whether or not you want to do your own research and make your own decision. And this is where I start looking as to whether or not this is changing. All these numbers are trailing 12 months. When we look at revenue, it is improving. Back in 2022, they were doing pretty good. They had a huge drop down here in 2023, and since that time have been recovering. You will notice steady growth in the past 8 quarters for Avant, all the way up to trailing 12-month revenue here of 31.6 million. The top line is improving, but you look at that bottom line, even looking at something like EBITDA, inconsistent, it's up, it's down, it's negative, it's back up again. Oh, no, it isn't. It's just negative. Right? Recently, negative 928,000, trailing 12-month EBITDA. If they could fix this, all of a sudden, I think more people would get excited about this company, right? No change here looking at margins. You know, gross profit margins started out around 37%. They've been as high as what, 44%, now down to 40%. So they're up a little bit, but inconsistent. Direct operating expenses as a percent of revenue, 32% back at the start of 2024, 32.5% in Q3 of 2025. So again, improving top line, improving revenues. They can't seem to improve the margins any, and expenses are basically flat as a percentage of revenue. So that has resulted in what we have seen here, which is a lot of negatives in the total comprehensive income or loss. However, there is a bit of hope, and why I am making this video, obviously, is there has been some improvement here in 2025, including their Q3 with 770,000 of total adjusted EBITDA. Now, is this a positive trend? Is this just a one-off quarter that they're not going to be able to sustain? That's what I'm curious about. And this just summarizes everything here, right? Great top line, volatile and unpredictable total net income. EBITDA is improving. Is that a trend or is that a one-off? One of the things they have done well is no debt and very little share dilution. So as we could see, the share price hasn't declined. This hasn't been a bad company. It just hasn't been a good company. It's just kind of stuck, right? It's very stuck. Can it get unstuck? That's the question. Because if it can, if we can avoid some of these negative adjusted EBITDA quarters, if we could see more of this, if this is a trend instead of just a one-off where they get good quarters and then they decline, I think if we can get a steady trend like this, investors would be more willing to pay a higher price. I think the real question ends here. What do you think? Do you think that this company is at an inflection point? Is it changing? Is next year going to be their breakout year? Is Q4 going to be consistently trending up from Q3? Does Wally and some of their other products and services finally start to take off, improve margins, get this company better on the bottom line earnings? Let me know what you think. As always, to continue researching Avant and other fantastic microcap stocks, go take a look at commonsensebrands.ca. As always, you've been watching Common Sense Investing. I thank you for your time. Good luck out there.